Today, more details about the Democrats' proposed Billionaires tax. Are you on the hook, and which assets will it apply to? And McDonald's making a healthy recovery out of the pandemic, especially compared to rivals. What's behind its stronger than expected sales? And General Motors also beating expectations, that's despite major challenges, but experts say there are more disruptions to come. That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. U.S. orders of durable goods, that's products designed to last at least 3 years, fell in September after 4 consecutive months of increases. The decline was driven by a sharp drop in transportation equipment orders. The chief economist for the National Association of Manufacturers says supply chain bottlenecks, worker shortages, and soaring costs weighed down the data, but he says it reflects a strong upward trend overall. New orders for capital goods, a proxy for business spending plans, rose 0.8% in September, and shipments of these core capital goods rose 1.4% to hit an all-time high. Still, shortages of labor and raw materials made it harder for factories to fill orders. But despite the relatively positive durable goods report, the U.S. trade deficit in goods surged in September. Exports tumbled and imports just rose slightly. The goods trade deficit increased over 9% to $96 billion, a record high. Goods exports dropped 4.7%, while imports jumped 0.5%. Trade has been a drag on economic growth for a year. Now the Atlanta Fed is cutting its GDP forecast for the third quarter again, now at 0.2%, barely an increase. We have more details today on the Democrats' so-called Billionaires income tax, although it's not a tax on income, but a tax on the value of your assets. Senator Ron Wyden is leading the effort. He's the chair of the Senate Finance Committee. Some are calling him the Senate's top tax writer. He says the tax would apply to around 700 Americans. If you've got $1 billion in assets or making more than $100 million per year, you could be on the hook. For liquid assets like stocks or bonds, at the end of each year, you total up your gains and losses, even if they're just paper gains, meaning you didn't sell the asset yet. Then you'd be taxed on any gains you've made. Right now, you're only taxed on money you've actually made through selling at a profit. The same would apply for harder assets like real estate or businesses you own. The value of these assets won't be estimated each year like stocks. That'd be difficult to do. But when you do eventually sell them, you'll have to pay interest on the capital gains you've been accruing all along. And considering the large valuations of some of these assets, that could be significant. Looks like this is replacing the traditional capital gains tax for billionaires. Senator Wyden says he wants to close loopholes that allow them to avoid the taxes altogether by borrowing money against the assets if they need cash, or simply passing them down at death, which all but avoids capital gains tax altogether. But a recent thorn in the side of progressives, Senator Joe Manchin, says he doesn't like the idea of targeting one specific group specifically, i.e. billionaires, especially when they contribute so much to the society. He does say, though, it's time for everyone to row together.
I don't like it. I don't like the connotation that we're targeting different people. There's people that basically, they've contributed to society, they've created a lot of jobs and invested a lot of money and give a lot to philanthropic pursuits. But it's time that we all pull together and row together.
One billionaire who isn't ready to row is Tesla boss Elon Musk. He wants Americans to push their lawmakers to reject the proposal. Just this Monday, Musk took the top spot on the Forbes rich list. He retweeted a letter that warned the new tax would make its way from billionaires to millionaires to regular everyday investors. Musk agreed with the letter, saying exactly, eventually they run out of other people's money and then they come for you. So joining us to discuss today's economic data is Ted Oakley. He's an investment manager and also the founder of Oxbow Advisors, where he helps high net worth individuals preserve their wealth. Now, Ted, great to see you as always. There's a lot of economic data I want to get to, but first of all, I wanted to get your thoughts on this new so-called billionaires tax on unrealized capital gains. What are your thoughts on it? Are you afraid maybe it will be expanded in the future? I know it's just targeting so-called billionaires at the moment.
Well, Paul, I do think you have a point there. You know, they tend to expand those things once they get, it's sort of like once they get it in there, they say, well, maybe we'll go from $1 billion down to 500 million. And then the next thing you know, that type of thing. I don't agree with it for this reason. I'm not saying that there's not a lot of people that have a lot of money like that that are not probably not paying that much in tax. But the problem is, I think they can do it. I'm talking about Congress, because obviously the voters are not going to care. There's not that many billionaires out there, so they won't care. But this is the one thing that does bother me a bit, okay? And that is, if you look at it, there are a lot of people who are self-made billionaires, okay? They started with really absolutely nothing or worse below that. And, you know, you look at about 70% of the Forbes 400 people are self-made, and most of those are billionaires. And so if you think about that, I think that is not what you're trying to ingrain into people, to say, hey, you know what, I had nothing, I went all the way, and I'm a billionaire. And by the way, those billionaires include some blacks and Asians and Indian people that you'd say, well, you know, they haven't had it as well, but you know, they did the right thing. They gutted it out, made a lot of money, and I don't feel that's a right thing to do. But it's not because I don't think that maybe they should pay a little more tax, but not like that. So that would be my idea.
There may be some people watching and they think, well, it's easy for Ted Oakley to say he's running a great investment firm, but to be honest, you've come from very humble beginnings yourself, right?
I do. I'm sure I was as poor as most anybody you interview. Now, don't get me wrong. I think that's okay. There's a tremendous amount of people out there I know that also came from really, really poor beginnings, and they were able to make it, you know. And it's like everybody, you know, you have to get educated on your own. You do it all on your own. There's a lot of gratification out of that, I might say, and I try to help a lot of kids do that same thing. But a lot of people out there in the U.S. like that, you know. So my hat's to all of them, off to all of them, really.
And looking back, because a lot of this money, of course, they want to put towards social programs and similar things, do you feel is the best way to spend it, or what do you recommend?
You know, Paul, if I were running things, I would look at things like this. If you look at the underprivileged and the lower middle class and the lower class and people, you know, what they need are tools to help them move forward. And we spend all this money on programs that really mean nothing, and we don't get the money to where it needs to go. If you look at all the money that came out in the CARES Act, if you stop and think about that, if that money had gone to families that don't have enough food, kids to educate, vocational schools for minorities, all that sort of thing, that's how you boost a country and an economy. And my thought would be, you need to channel that money into that area, but we really don't do that, and that's unfortunate.
Ted Oakley, Oxbow Advisors. And Democrats have another new tax proposal to help pay for President Biden's agenda. This time it's for corporations. The aim is to stop big companies from avoiding taxes altogether. NTD's Jessica Beatty reports.
Senate Democrats are proposing a new corporate minimum tax rate to fund President Biden's spending bill. The proposed 15% minimum tax would apply to companies that report more than $1 billion in profits.
The proposal is to fix the Amazon problem. We put the focus on, let's make sure that those who are not paying at all really have to step up and do their part.
The plan would affect roughly 200 businesses and would include some preservations for business credits, as well as some flexibilities for companies to carry forward losses and utilize other tax credits. This plan is different than a straight increase in the corporate tax rate, which Arizona Democrat Kyrsten Sinema was opposed to. But Sinema supports this plan, calling it a common-sense step. The Wall Street Journal reports the proposal wouldn't affect domestic retailers much because they don't get many tax breaks and they already pay more than 15%. It would likely hit tech companies and manufacturers the hardest because it would limit the tax breaks they benefit from now. Republicans have panned it. Critics argue a better alternative is to just fine-tune existing tax incentives. Jessica Beatty, NTD News.
And a trade body says holiday sales could rise over 10% this year. That's as major consumer good makers and retailers are working to prevent supply chain disruptions from leaving shelves empty. The National Retail Federation forecasts sales to increase up to 10.5% during November and December. That's compared to last year. It says rising income and stronger than ever household savings would help people pay for more goods, even as companies raise prices to counter inflation. It added there is exceptional demand for holiday products, with the NRF's chief economist saying if retailers can keep merchandise on the shelves and merchandise arrives before Christmas, it could be a stellar holiday sales season. Wait and see. And stocks faded in the last hour of trading, ended mostly lower for the day. It's a day after the S&P 500 and the Dow set their latest records. Today, the Dow fell 266 points, about 0.75%. S&P 500 lost 23 points, about 0.5%. The Nasdaq pretty much unchanged today. But the world's largest fast food chain released its numbers today, and it's recovering far better than rival Burger King. Could it be because of its famous orders promotion? NTD's Fake Quarter has more.
McDonald's is recovering faster than its rivals, including Burger King. In its latest quarterly report, the company had earnings per share of $2.76, while analysts on average expected $2.46. On a two-year basis, same-store sales rose 14.6%, while for Burger King, they went down 5%.
Reopened nearly 80% of our dining rooms in the U.S. Roughly 3,000 dining rooms remain closed in high-risk COVID areas as we continue to prioritize the health and safety of our customers and crew. In restaurants where we have reopened dining rooms, front counter and kiosk sales remain below pre-pandemic levels.
Can I get a hamburger?
The company's U.S. loyalty program has enrolled 21 million members, with 15 million active users since it launched in July. For comparison, Starbucks started its loyalty program in 2009 and had 24.2 million members in its most recently reported quarter. And Chipotle started its program in 2019 and had 24.5 million members in the most recent quarter.
U.S. franchisees have never been better positioned to weather the labor and inflation pressures while still investing in growth. Performance in the U.S. remains driven by strong average check growth, reflecting larger order sizes and menu price increases.
McDonald's also praised its famous orders promotion with rapper Saweetie.
I'm Saweetie, and this is my McDonald's order.
Who says partnering with McDonald's was better than falling in love. Fake Quarter, NTD News.
And plane maker Boeing reported earnings today, managed to book a small profit in the third quarter. That was helped by a jump in aircraft deliveries as global air travel demand rebounded. Revenue rose over $15 billion, fueled by deliveries of its once best-selling 737 MAX jets. Growth in its services unit also boosted revenue, but the company booked charges as losses on its 787 Dreamliner. Structural defects with the jets have cost Boeing $1 billion for inspections and repairs over the last 2 years. That's $183 million in the last quarter alone. General Motors suffered losses this past quarter, but still beat Wall Street expectations. Experts say there are more disruptions to come, though. Here's NTD's Evelyn Lee with more.
General Motors beat Wall Street estimates for the third quarter. The company also told investors that the full-year results will be at the high end of the previous guidance. But despite doing better than expected, supply chain issues and the chip shortage took a major chunk out of GM's sales. And GM's revenue plummeted about 25% in the third quarter compared to 2020. Supply chain problems has hit the auto industry hard for months. Manufacturers closed their plants, cut down on production, and overall, sales went down.
But clearly the one item that most manufacturers have been pointing to are these silicone chips.
Charles Chesborough, the senior economist at Cox Automotive, says the automaker expects the chip shortage to improve in the coming months. Stephen Ezell, the vice president of global innovation policy at ITIF, says he hopes that the shortage will start to improve by the second or third quarter of 2022.
The backlog of chips for the auto industry is still about 2.5 months. I mean, we've even seen, components that used to go for as little as 10 cents now costing $60,000.
On top of that, there was a Chevy Bolt recall, but earnings benefited from a deal with LG Electronics. It offset almost all of the $2 billion in estimated cost for the recall.
The financial wing of General Motors actually did fairly well. Their lending arm of lending money to people to actually buy vehicles outperformed.
He says higher vehicle prices also helped the company's bottom line. Chesbrough expects more disruption in the coming quarters, but once the chips become available again, he believes GM will be able to stock up supply rather fast. That's especially with all the partially built vehicles that they have. Evelyn Lee, NTD News.
And despite the chip shortage, Intel is launching new, faster computer chips. It hopes to regain the lead in making the fastest computer chips in the world. The company says the new line will eventually have 60 different chips for 500 models of PCs of various brands and sizes, starting out with just 28 versions. Intel also says the supercomputer is helping the U.S. government build will be twice as fast as originally planned. It also says its $500 million supercomputer Aurora will also be twice as fast. Intel had to push back the computer's original delivery date because of manufacturing delays, but the new chips will be available starting next Thursday. And families in France are doing all they can to cut their expenses, but the spiraling cost of electricity is squeezing some household budgets to breaking point. Olivia Chan reports.
Jacques Cardio, like many in France, is doing all he could to cope with the spiraling cost of electricity. His family is now facing monthly power bills nearly 3 times higher than before the global health crisis.
All our earnings have to be spent on electricity, the utilities, the rent, the daily costs of living, fuel. We have all that at the same time. That would be hard. Not just a bit, but too hard.
This is his wife, Helene.
What can we cut down? We can cut down on food. We can cut down a bit, deprive ourselves a bit on it. But with energy, we can't do that. The bills come in every day. We don't know what to do. We need energy to live. We need lights. We need all that.
Wholesale energy prices in France have surged, partly due to low gas stocks and a jump in post-lockdown demand. The French government last Thursday announced that low-income households would receive €100, that's $116, to help mitigate rising costs, after extending an energy grant to more households. But a social worker at the firm that helps the Cardios says the government grant only covers a fraction of the costs. According to a survey from the country's national energy mediator, 1 in 4 French people said they are struggling this year to pay their gas or electricity bills, up from less than a fifth in 2020.
Terrible. Still to come this evening. Chipotle unveils its Halloween deal online. Find out how you can grab a virtual costume and get a free burrito. And robot grocers, one online supermarket company, is building them to supply groceries in London, and international retailers are taking notice. That and more coming up on NTD Business.
Secure, the true solution for your digital privacy and security. Secure is a private and secure messaging and email solution hosted in Switzerland, using military-grade encryption and Swiss privacy laws, giving you true privacy. Secure is 100% private and does not collect or sell any of your personal data. Secure's Helix technology connects you securely to our Swiss servers without the need of a VPN, guaranteeing privacy and security for all your communications. Secure Messenger doesn't require your phone number or any personal data that hackers target. Chat by Invites allows you to chat privately and securely with anyone outside of your secure network without the need for others to download Secure. Secure Send offers you a private and secure way to email anyone outside of Secure. You won't find this level of privacy or security on any other email or instant messaging application. Visit secure.com. Regain and protect your privacy today.
Shall we begin?
People are starving, sir. They're unable to buy a simple loaf of bread. Can you make any exception to the mark 666?
None. If you don't get the mark, you don't eat. It's that simple. My goal has never changed. People will bow down to me, or they will die.
Welcome back. Chipotle is once again changing up its Halloween tradition due to the pandemic. It's moved this year's Boorito deal online. Chipotle says to get a free burrito, you have to visit its virtual location on the mobile platform Roblox. All you gotta do is grab a virtual costume and beat its Chipotle Boorito maze. The first 30,000 customers who participate will receive a free burrito code. The codes can then be used on Chipotle's website or mobile app. The online Boorito deal will last 4 days, beginning Thursday through Halloween. And Seattle police say they've disassembled a criminal Lego trafficking operation, brick by brick, they say. They arrested a 67-year-old store owner and seized more than 170 stolen Lego sets. The stolen goods are worth thousands of dollars. According to police, the owner knew the products were stolen. He now faces charges for trafficking in stolen property, so police are still investigating the alleged shoplifter. And the UK's online supermarket Pioneer has built robots to supply groceries in London. The machines have caught the attention of international retailers battling a shortage of workers and rising wage demands. NTD's Andrew Thomas has the details.
UK online grocer Ocado is betting big on robots. It plans to automate most manual warehouse jobs within a decade, and its success could have profound implications for labor in the retail industry globally.
Overall, the goal has always been to say, how can you reinvent grocery for the better? And essentially the question grocery industry has been asking itself for some time is to say, okay, online looks like a loss-making business. How can we make it into non-loss-making business?
Ocado has already struck deals to provide its technology to supermarket groups in 9 countries, including the United States, Japan, and France. In this huge warehouse, over 2,000 robots whiz around on a steel and aluminum grid, retrieving groceries stacked below.
In an Ocado warehouse, you will have 15 minutes of labor involved in preparing a 50-item order, which you compare then with 4-5 times that to prepare that order in stores.
Along with speed, a software platform preempts demand and helps guarantee product availability.
For a big period of COVID, the boardroom agenda was, I need to get product into my stores. So that was, now that the dust is settling and the big recognized transformation pre and post COVID is the move to more online sales.
Some industry executives still see Ocado as a complicated venture that will struggle to make a profit. Analytics firm Ortex says in 2017 and 2018, it was often the most shorted UK stock. Andrew Thomas, NTD News.
And researchers say they may have found evidence of ancient life in a ruby. Canadian scientists say a 2.5 billion year old ruby they found in Greenland contains graphite. That mineral is made of pure carbon, which is the core component of organic life. Of course, not all carbon indicates life, But researchers say this particular carbon they found in the ruby appears to contain isotopes indicative of atoms that were once part of living organisms. Scientists believe bacteria are responsible for leaving the carbon behind that was incorporated into the ruby. And in Italy, long weekend lunches used to be the norm, not anymore. Now one restaurant is bringing a traditional dish to the street food age. They created a walking steak, slow food on the move. Here's NTD's Errol Rhodes with the story.
Florentine steak used to be the reserve of Tuscan fine dining. Now it's joining the street food revolution. Tradition dictates Florentine steak must be cooked on oak embers and served on a hot plate. But amidst fast-paced tourism and pandemic restrictions, restaurant owner Adele Voza offers a walking steak for diners on the go.
The idea of the walking steak was born some years ago when we were at the seaside and saw kiosks selling fried fish. We are a meat-based restaurant, so why not try with meat?
Italy's gastronomic traditions are strict. Voza says customers were sceptical when she launched the dish of warm chopped steak with potatoes in cardboard tubs. But they soon became curious, especially those who have a short lunch break and don't want sandwiches every day.
The typical customer is the one who does not have much time and does not want to eat sandwiches or other heavy food.
Roberto Rossi is a chauffeur and spends his days driving tourists between Rome and Florence. With little time for meals, he wants traditional Italian food and is a big fan of the walking steak.
If you have a lunch break from the office, if you have less than an hour and you don't want to sit at the restaurant, you order the walking steak and sit outside in the fresh air. It's a novelty.
Chef Shady Hasbin says street food is an ancient Italian tradition.
In Pompeii, street food traces were found. In Roman settlements there was street food, just because it was a need. Today, street food came back to be important under a more playful light, more recreational.
Florence is a popular tourist city. Many come to enjoy its art and food. Andrea Bignello and his wife are visiting Florence from northern Italy.
It's a pity to be forced to sit and eat it, and it's a pleasure to enjoy it while walking with friends in a marvelous city like Florence. So why put the limit of a sitting lunch and not be able to eat walking with friends? It's beautiful.
Voza says traditionalists consider the walking steak unacceptable.
Heresy? I feel like I'm doing heresy, since steak is an untouchable dish for Tuscan restaurants. Why not try something different? The outcome could be good or bad, but if you don't try, you'll never know.
With a price of £13, the walking steak costs much less than eating in a traditional Florence restaurant. And that may just suit those happy to take a walk on the unconventional side. Earl Rhodes, NTD News.
That's the latest business updates for today, but you can still catch NTD Evening News with Stephanie Cox. That starts at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching. We'll see you tomorrow.